Okay, good morning, my 111 students. So this video is the first video on merchandising concern type of business. So before we go over with the journal entries and computations, you need to know about the definitions of the following items. What is a merchandise? So a merchandise refers to the goods that are intended for sale of a trading concern. So for example, for a grocery store, the grocery items are the merchandise. In a retail store of bags, so the bags are the merchandise inventory. In a shoe merchandising business, so the shoes are the items for sale. So these are what we call their merchandise. So what is sales? Sales is a revenue account that is used to record income that is derived from the sale of goods or merchandise of a merchandising or trading concern. So for example, if your business is a retail store of bags, so every time you sell a bag, so that is a revenue on your part, and the account title used is sales. So if you sold a bag for cash, so debit cash, credit sales. If you sell the bag on credit, so debit accounts receivable and credit sales. Sales returns and allowance versus purchase returns and allowance. So sales returns and allowance refers to the account used to record the merchandise that are returned by the customer or buyer, or any adjustment to the price of the goods sold. So sales returns and allowance is with the viewpoint of the seller. Whereas if you are the buyer and you return goods that is purchased from your supplier, that is called purchase returns and allowance. So in our previous example, if you're a retail store of bags, so when you purchase bags from your supplier and then you return one item, so that is debit, purchase returns and allowance, and credit, purchase, debit, accounts payable, and credit, purchase returns and allowance. Decreasing accounts payable because you return an item that is purchased. Whereas, if you are the seller, so as a retail store, one of your customer returns a bag that is previously purchased. So when the customer of yours returns the item, so you debit sales returns and allowance, and then credit accounts receivable. Sales discount versus purchase discount. So sales discount or purchase discount is actually a cash discount. So the cash discount is sales discount on the viewpoint of the seller, while purchase discount on the viewpoint of the buyer. So this is actually an account title that is used to record the amount that is deducted from the price of the goods as an incentive for early or prompt payment. And this discount is normally recorded in the general journal. What is a credit period? So this normally is in connection with selling of goods on credit or on account. So the terms or the credit period is actually expressed in number of days. Say, let's say 30 days, 45 days, 60 days. So example, if the credit term is 210 and 30, this means that the credit term is for 30 days. And 2% is given as a discount if the customer will pay within 10 days, and no discount if the customer will pay beyond 10 days, and the days up to is 30 days. So that the 10 days is actually the discount period. What is purchases? So purchases is a temporary account used to record the cost of merchandise bought during the period if the entity uses the periodic method of accounting for inventory. So let's say, for example, you are a retail store of the bags. And then, so when you purchase from your supplier different bag items, so you will debit purchases and credit accounts payable if you purchased it on credit, and credit cash if you purchased it for cash. What is a trade discount? So trade discount refers to discounts given to customers, buyers, to encourage them to buy the products because of low price due to discounts. In accounting books, this is actually not recorded because this is deducted from the list price to arrive at the invoice price, whereby it is the invoice price that is recorded as the value of the sales on the books of the seller and value of purchases on the books of the buyer. Transportation costs. It refers to the cost of transporting goods from the seller to the buyer. If the buyer shoulders the cost, the account title used is actually freight in or transportation in. Whereas, if the seller is the one to shoulder the cost of the transportation, the account title used is freight out. It can also be termed as delivery expense, transportation out, or transportation expense. So we have actually four terms of freight terms. So FOB destination. So FOB means free on board. And when we say FOB destination, it means that the seller is the one responsible of the shipping cost because in FOB destination, it is the seller that is the owner of the goods while in transit. So the title to the goods is passed on to the buyer only upon the point of destination. Whereas in FOB shipping point, so this is the goods while in transit is owned by the buyer. So meaning from the moment it is loaded in the shipping dock from the seller's place, the goods are already the title to the goods already passed on to the buyer, so that it means that the buyer is responsible for the shipping costs. Merchandise inventory. This is an account title that is used to record the cost of goods that are not sold at the end of the accounting period. So meaning if you purchase 10,000 bags and you sell only 8,000 bags, so 10,000 minus 2,000 bags, your inventory is 2,000 pieces in terms of pieces, and then multiply it with the cost of purchasing the bag per piece. So that is now your merchandise inventory in pesos. Whereas cost of goods sold or cost of sales, it represents the cost of inventory that the entity has sold to customers. So in the previous example I mentioned a while ago, so if you sold bags 8,000 pieces, so 8,000 pieces times the cost of each bag, that is your cost of sales. Whereas gross profit is the difference between sales and the cost of sales. So sales less cost of sales is equal to gross profit. Distribution costs. This represents the expenses that is incurred in the distribution or selling the products, such as the salaries of your salesmen, commissions given to salesmen, the freight out, advertising expense, rentals of the marketing department, and other related expenses in relation with the selling of the products. And to differentiate, administrative costs are costs incurred not related to selling and distribution of the products. So for example of this are the expenses incurred in carrying out the business operations, such as the salaries of your admin employees or administrative employees, the light and water of administration office, and many more that are not actually related in the distribution of the products. What is a sales invoice? So this topic here mentions about the different source documents in a merchandising type of concern. So sales invoice is a source document that is prepared by the seller of the goods, and this is actually sent to the buyer to document the revenue of the entity. So this is normally recorded in the sales journal. The bill of lading is a document actually that is issued by the carrier. So if the carrier is truck, so tracking carrier, the plane or the vessel. So it details the agreement and terms of the delivery, such as the freight terms, the time, place, and also the person authorized to receive the goods. Statement of account. This is actually a written notice to the debtor specifying the accounts that are already due. So this is another form of a source document. Official receipt. So this is actually given to customers who make payment. So a source document that supports the receipt of cash by the seller. And this is actually normally recorded in the what we call cash receipts journal book. Deposit slip. These are forms that are owned by the bank to be filled up by a depositor. That is and in the form stipulates the depositor's name, the account number, the date, and the details of the deposit. So when this form are validated by the bank, it indicates that cash and checks were actually deposited or credited to the account of the holder or the company. This is another source document. What is a check? A check is a source document issued by a depositor ordering the bank to pay the amount stated in the check from the depositor's demand deposit account to the person indicated in the check, which is the payee. So, the check, the name that is written in the check is the payee to receive the cash. And then, the one who prepares the check is the company, the payor. And then, the payor orders the bank because the payor has actually a cash that is deposited in the bank in the form of a demand deposit account or a checking account. So a check is a document that supports the cash voucher as a proof that something is being paid. Normally, the check is recorded in the cash disbursements journal. Purchase requisition. This is a source document that is made by the buyer authorizing the seller to deliver the merchandise as detailed in the form. Receiving a report. So after or making the order through the purchase requisition, the receiving report is a source document containing information about the goods that is received from the vendor. So this document is normally supported with vendor's invoice and the purchase order of the entity who made the purchase. This is normally recorded in the purchase journal. Credit memorandum. This is a source document issued by a seller to inform the buyer of any adjustments made of the buyer's account which might be caused by return of goods or price adjustment. This is normally recorded in the general journal. What is a debit memorandum? So, another source document that is issued by the buyer to inform the seller of any adjustment which might be caused by return of goods or price adjustment. And again, this is normally recorded in the general journal. How to compute cash discounts. So, take this as an example. On March 1, 2020, ABC sold merchandise to M for 20,000 with terms 210 and 30. So, to get the cash discount, the value of the merchandise, which is 20,000 times the discount of 2%, so you have 400. This cash discount is to be given if payment is made on or before March 11, counting from March 1 and 10 days. So, March 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So, March 11 is the 10th day. So, the entry on March 1, on the seller's point of view and the buyer's point of view. So, on the seller's point of view, debit accounts receivable, 20,000 and credit sales, 20,000. Whereas, on the buyer's point of view, debit purchases, 20,000 and credit accounts payable, 20,000. The entry on March 11, payment within the discount period. So, the seller will receive cash of 19,600 and will debit also sales discount of 400, then credit accounts receivable of 20,000. On the buyer's point of view, so it involves cancellation of the liability, which is accounts payable debit 20,000, and cash payment equal to 19,600 and credit purchase discount of 400. So please take note, the cash discount is sales discount on the viewpoint of the seller, and on the viewpoint of the buyer, that is purchase discount. So in the event that the collection has been made after March 11, so that means the cash discount is not taken. So the entry will be debit cash on the seller's point of view 20,000 and credit accounts receivable 20,000. On the viewpoint of the buyer, debit accounts payable 20,000 and credit cash 20,000. How to compute trade discounts. So example 1. On March 1, 2020, ABC sold merchandise to Y on cash for 100,000. The terms is less 5% and then cash on delivery or COD. So that the less 5% here is actually the trade discount. So to compute for the invoice price, 100,000 times 0.95 because 100% less 5%. So the answer is 95,000. So 95,000 is the invoice price that is to be recorded as the value of sales for the seller and the value of purchases for the buyer. Another example for computing trade discounts is this one. So example 2. On March 1, 2020, ABC sold merchandise to Y on credit for 120,000. Terms is less 10% and 210 and 30. So this means 10% is a trade discount. So to compute for the invoice price, 120,000 times 0.90 because 100% minus 10% of trade discount, so 90% is the invoice price. So 120,000 times 0.90 is 108,000. So that is the invoice price, which is the amount to be recorded as sales on the viewpoint of the seller, and on the viewpoint of the buyer is recorded as purchases. So please take note that trade discount is not recorded. So the entries. On March 1, on the viewpoint of the seller, debit accounts receivable 108,000 and credit sales 108,000. On the viewpoint of the buyer, debit purchases 108,000 and credit accounts payable 108,000. On March 11, assuming it was paid within the 10-day discount period, so debit cash 105,840, debit sales discount 2,160, and credit accounts receivable 108,000. On the viewpoint of the buyer, debit accounts payable 108,000, credit cash 105,840, and credit purchase discount 2,160. So the discount is computed as 108,000 times 0.02. So that's why 2,160 pesos. So if no discount has been taken because it was paid after 10 days, so on the viewpoint of the seller, debit cash 108,000, credit accounts receivable 108,000. And on the viewpoint of the buyer, debit accounts payable 108,000 and credit cash 108,000. Another example on computation of trade discounts is the one that involves series of discounts. So example, on March 1, 2020, ABC sold merchandise to Y on credit for 200,000. The terms is less 10%, 5%, and then 210 and 45. So this means that trade discount is 10% and 5%. And then the credit term is within 45 days, 2% is given if paid within 10 days. So to compute for the invoice price, so 200,000 times 0.90. So the 0.90 is taken as 100 minus 10%. And then times 0.95. The 0.95 is 100 minus 0.05. So that's why 0.95. So 200,000 times 0.90 times 0.95, the invoice price is 171,000. So this invoice price is the amount to be recorded as sales in the viewpoint of the seller and purchases on the viewpoint of the buyer. So please take note, the trade discount is deducted and does not appear actually in the entry. The cash discount. So cash discount is invoice price times the discount of 2%. So 171,000 times 0.02, the cash discount is 3,420. So the entries. On March 1, 2020, on the viewpoint of the seller, debit accounts receivable 171,000 and credit sales 171,000. On the viewpoint of the buyer, debit purchases 171,000, credit accounts payable 171,000. On March 11, 2020, if the seller collects within the discount period, assuming to debit cash 167,580, sales discount we computed in the previous slide 3,420, and credit accounts receivable 171,000 on the viewpoint of the seller. On the viewpoint of the buyer, so accounts payable to be eliminated 171,000, credit cash 167,580, and credit the purchase discount 3,420 pesos. Inventory systems. So we have what we call actually periodic system and the perpetual system. However, the video discussion for periodic and perpetual system is on the next video to be uploaded soon. The end. That's all for this video class. So thank you and God bless.